G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. I've changed the setup a bit today, but it's really important. We need to talk about something. The stock market is doomed. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So we need to talk about something that is very important. If you've been following the stock market recently, you would have seen that the stock market has actually dipped a fair bit. You know, we're looking at about a 5% drop. So in the scheme of things, this isn't a huge amount. If we look at a chart that goes way back, but the thing is, on a macro basis, things might be looking a little bit hairy. So I wanted to delve into some of the reasons why this is actually happening, why the stock market is dropping, and what you can actually do to profit from this particular situation. So make sure you like and subscribe. So the S&P is down over 5%. The NASDAQ, which is very tech heavy, is pretty much the same. So countless stocks have been beaten down. We're looking at Facebook, Amazon, Wynn, Tattooed Chef, Palantir, Nvidia, basically anything in the market that is even remotely tech related and even not tech related has been absolutely hammered recently. There's a number of different reasons to this, and I wanted to delve into them right now. So investors have grown increasingly uneasy as accelerating economic activity and monetary stimulus gives way to slowing economic growth and steps towards policy normalization. So basically, in a nutshell, what that means is that investors are concerned that things are getting back to normal. The last 2 years have been anything but normal. We've seen artificial lockdowns and the economy has been artificially shut down because of a certain virus that's been going around. Now, the thing is, over the last 2 years, the Fed and reserve banks all around the world have been forced to pump so much money into the system. And as a result, this has actually been really good for shoring up the stock markets and shoring up the real estate markets pretty much everywhere around the world. Governments that have been pumping money into the system have seen a rise in the stock prices of their companies and also real estate. Australia is no different. The US is very much the same. So not only this, interest rates have dropped dramatically as well. And as things start to normalize around the rest of the world, we'll see something similar to that here in Australia. But it's very likely that to keep inflation under control, which is the goal of pretty much all reserve banks around the world, as that starts to normalize, we're going to see interest rates creep up, which is going to be quite bad for asset prices. In particular, real estate is very sensitive to interest rate rises. And of course, businesses are also quite sensitive to that. I think, if anything, it's going to be quite a slow rise in interest rate rises, purely because businesses that have taken on a lot of debt to get themselves through the current situation and economic conditions are going to really struggle if interest rates start to rise even more. So basically, people are terrified that things are getting back to normal. It's a very weird world and the stock market is no different. On top of that, bond yields are going up, which means that people are selling out of bonds. So as a result, the yields are getting better. So there's a little bit of concern there within the stock market. Now, because things are changing, there's all of this uncertainty around the stock market, and this is what's making investors start to get a little bit scared of conditions, and that's why they've maybe taken some profits, they're selling out in fear of the stock market going down further. So what is it that we can do to actually make money during this time? Now, it's very hard to time the market. You know, obviously anything that I talk about here is not financial advice. I don't know if the market's going to dip for the next year or 2 years. No one really knows. But the thing is, based on what we've seen in history, it's buying index funds and holding them for the long term that has yielded fantastic results with very little effort. So most of my investing strategy involves around individual stocks. I don't hold much in ETFs and broad market funds. You know, that might be a smarter decision if I did that. But nevertheless, my investing strategy is to invest in high growth companies in high growth areas. And I think lining those two things up, which I've talked about on the channel, is incredibly important. So we're seeing a bit of a divergence in the stock market right now. You'll see that large caps are still quite expensive. Their PE ratios are quite high compared to the mid caps and especially the small caps. And as these small caps continue to get hammered, they get lower and lower and lower. So as a result, I'm actually picking up a lot of small cap stocks at the moment. I've actually loaded in quite a significant amount of money ever since this drop started to happen into the small cap region. And the thing is, with money that flows from large caps into small caps, it doesn't take much money for those stocks to really rocket. You know, if we look at Google, you know, they're losing billions or gaining billions of dollars every day. You do that to a small cap company, that kind of money starts to flow into one of them that has the potential for some serious moves. So when things do change around, and they always do, sometimes the small caps are in favor, sometimes it's the large caps. When they do move, it's gonna be like a rocket ship. So I'm just biding my time as the stocks continue to dip. I'm just adding a little bit more. So some of the stocks that I've been loading really heavily in recently include Voyager Digital, which is a new stock that I've purchased in the last couple of weeks. I've loaded in about 15 grand so far to Voyager Digital. I'd be happy to push this to about 30 grand into that position. You know, it's been beaten down a lot. The chart, if you go by chart analysis, does not look good at all. But I think the fundamentals and the growth of this particular business is something that I'm really attracted to. So that's why I've been loading into it. So who knows, it might continue to drop, but I'm happy to keep picking up more shares for cheap at this point. Another one that I've been nibbling at is, of course, Tattooed Chef. Anytime you see that under $18 a share, I'm just loading up a little bit there. You know, not massive amounts because I already have a very large position that's worth, you know, nearly $100,000 in this particular stock. So just loading in little bits of that. And of course, my other one, which I've been buying a little bit under $230 a share, has been Coinbase. But very much the same, very small amounts, because I've seen a great opportunity here in Voyager Digital. Of course, you know, do your own research when it comes to investing in stocks. But the small caps has been where I've been paying attention the most. So just dollar cost averaging is definitely the way to go, because sometimes the stock market will go up, sometimes it'll go down. We just don't know. So I'd be really keen to hear what you're doing with your money in this current market. Are you just waiting for things to drop a bit more? You know, have you been buying? I'd be really keen to hear what you guys have been up to. So thank you guys so much for watching. Please make sure you like and subscribe. It really helps to get these videos out to more people. My name is Seeney, and of course I have a link to stake if you want to get yourself a free stock. You sign up, put money in the brokerage, free stock, fantastic. And also I track my net worth with WeMoney. So if you're interested in getting involved with WeMoney, they'll give you $5 just to sign up on the platform and track your net worth, which is fantastic. So thank you guys so much for watching. Please make sure you like and subscribe, and we will see you later.